Hey there, Joe DiSanto here. Thanks for joining me again in another video. I appreciate it. In this video, we're going to talk a little bit about if there's upcoming stock market crash, quote unquote crash, like, are 401ks a good place to be? This is how that question was posed to me. So I'm going to talk about this in general, but also clarify a couple of things. But before that, if you don't mind, you like my content, please like and subscribe. That really helps me out. Thanks so much. Okay, so if there's a 401, okay, if there is a coming, stock market crash or correction or whatever you want to call it, are 401ks a good place to be? So that question is a little flawed, just in general. 401ks by themselves are not an investment. They are a type of account, a tax-deferred investment account, in which you usually are invested in stocks. So I think the question really is, if we see an upcoming potential market correction, is investing in stocks, in the coming months or year, a good idea still? And I think the answer to that question is that it depends, as always. I think one of the things it depends most on is your age. In general, the issue here is if you're young and you're going to be working for a while and you have a long investment horizon and you're going to be continually investing over the next coming years, it shouldn't matter too much to you if the market, crashes or has a correction or whatever. That's a common thing. And even, the biggest crashes of the stock market over the last 100 years, the stock market has rebounded and then climbed higher. So if your investment time horizon is long, I would say keep investing in your 401k in general, because it's a good type of investing account and being tax deferred, or even if you're doing the Roth. But the stock market's probably where you want to be for the most part. And if the stock market goes down, buy more. Dollar cost average down, and buy more stock while it's down. Now, if you're in, late 50s, early 60s, you're still working, you're still contributing to your work 401k, but you have your retirement on the horizon, or you're pretty close to that. Generally speaking, I would say your asset allocation inside your 401k should have been adjusted to reflect that. Usually, the older you get, you adjust your asset allocation so you're in less risky investments and perhaps more in bonds or short-term higher interest rate investments, because you want to protect your capital and protect your ability to retire. Just imagine that it's 2007, you're about to retire in a couple years, and you have your entire portfolio in the stock market, and the stock market drops by 60%. Well, your retirement is obviously going to be put off in that case, because you don't want to go liquidate your account with the stock market down. So I always say your risk tolerance is really equal to your willingness to keep working in a long and or sharp, prolonged market downturn. So, but whether the stock market has a short-term correction or a year-long correction or not, is not the issue there. It's, what is your asset allocation? So if your asset allocation is reasonable and you have, 1 or 2 or 3 years even on the horizon for continued work, probably continuing to invest in the asset allocation you have set up is fine to do. How do you know what your asset allocation is? Well, you should know enough about investing at this point to know what an asset allocation is and what it should be for you. If you have enough money in your 401k account, your provider from your employer may offer a person you can talk to discuss that topic. A lot of 401ks today now are essentially robo-operated or robo-advisors, like Betterment or something like that. And you tell Betterment, you tell the robot, hey, this is my age, this is when I want to retire, this is how much I have, this is what I'm investing, and it will automatically adjust your asset allocation to be within whatever the acceptable parameters for that topic for Betterment are. So There you go. Hopefully that helps and puts you at ease, and I'll see you in the next video. Bye.